But what I'll do is let me set this up so I can put the trades in. You guys can see it in case you don't know how to do it. I went through this in the boot camp, the PTU training, but let's say you're back testing, right? You go back to some point in time. And, if you can go back a couple contract months and get 200-300 trades in your spreadsheet, that's pretty darn good. But the statistics start to stabilize around 75 to 150 trades. Somewhere in there, you could start relying on the statistics. At that point, it starts to stabilize. In other words, they're not going to move dramatically with every trade. They're going to be stable, and you're going to get a good idea of what to expect. It doesn't mean it won't start trending up or trending down and stuff, but the more the better, obviously. Of course, market conditions today are not the same as they were 3 months ago. That's a whole nother conversation. What you're really trying to do, understand when you're using the UTA, you really got to flush out your questions and your premises, the thing you're trying to discover. Okay, you want to get the most benefit out of the UTA you can because you're putting a lot of effort into it. One of the things you want to do is create a trade plan, obviously, and by putting in a lot of trades and a lot of data and experiencing the trades click by click, forcing you to think through stuff, that learning process is going to help you get to the trade plan that's going to be best for you, okay? I'm showing you one way to do it, but with Trend Jumper, it's so versatile. You really need to adapt it to your own style of trading, your own lifestyle, and that's why the Success Guide puts that self-analysis step at step number 1, okay? But let's say you've gone through all that now. You're testing soybeans, for example. The other thing that you want to get out of your work doing this, the most important thing when you're starting out and even long-term, is the win-loss column. You got to get trades to populate a win-loss column so that you can experience really bad sessions, right? You want to be able to experience the worst of the worst and get that horrible feeling. As unpleasant as it is, that's the most valuable thing that can happen to you. Because ultimately, when the winners come pouring back, and let me just set the range here, 1667, get it current. When the winners come pouring back, and despite the losing trades, you end up with this. Right? This is tough in here, right? You can see there's a period of time through the summer where soybeans is just not getting any traction, and you're going to experience that. If you're trading it with real money, you're going to experience this and go, wow, I'm working really hard and I'm just not getting anywhere. Because that's going to happen sometimes, right? The forest grows when it grows, and then it stalls out when it stalls out. But notice it did get to new equity highs recently, despite some up and down, up and down, up and down. This is the forest, and this is the thing you have to ultimately elevate to, where you can look above and make your trade decisions that are based on the long-term growth of what the trade plan produces over time. You can't get caught up in what's going on trade for trade, the minutia of the trees themselves. These are the trees. You don't want to be living inside the trees, running around trying to avoid this or this. What's that? 5 losses in a row from Friday to Monday. You can't avoid that, guys. And you have to have enough capital to sustain it. But you also have to experience this thing in a back test, the discomfort and then the elation of seeing it actually work. Experience the losses, but then experience the growth. You have to sacrifice a third to get the 2/3 growth. That's the sweet spot. 1 step backwards, 2 steps forwards. That's just how it works. And so that's the biggest value that you're going to get from back testing, forward testing, manually putting trades in, and thinking through the process. Understand that, because if you start back testing and going through stuff and you don't have the right idea of what you're trying to accomplish, it's like they say, garbage in, garbage out. So go into this with the right idea. You have to have the right goals in mind. You have to have the right You have to ask the right questions in order to get the right answers. And a lot of people go into this without really paying attention to the importance of the win-loss column and the psychological experience that you go through when you're entering the random distribution of trades, wins, losses, losses, wins, win, 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 loss, 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 loss. It's random, right? So you're looking for that edge, that statistical edge over time that's going to make you money. That's step 2 of the success guide, isn't it? Your reason for trading. So it all fits together. Yeah, Eric, for me, I've found that 7 trades is about right. You might decide that's too many. And noon, stopping at noon. Let's see, here's a trade at 11:35. Here's a few days that I didn't finish. Let's see, 1, 2, 3, 4. So this one still needs to go back, and I got to put 3 more trades in on that one. It's pretty complete though. For the most part, I've kept up on it. Here's one at 11:25. So it doesn't get there that often, right? There's one at 11:17. So by looking at this, here's one that there's just a day missing. Yeah, see, it doesn't get to 11 very often. It's every now and then. You saw 2 of them that were around 11:30-ish. The market really slows down. There's one at 11:26. So I'm going 7 trades. I won't go past noon. You don't see very many at that late time. So you see how that information is pretty valuable to help you formulate a plan? And are they usually on Fridays? That's a good thing to look for. I mean, you could easily just expand this out, and you can go to day of the week. I mean, it's got a 1.52 profit factor. I mean, it seems, yeah, it looks like it's the lowest average profit per trade, but it's still enough to offset trade costs. It makes up 21% of all the trades on the spreadsheet. Thursdays have the highest winning percentage. I mean, they're all floating around the 70% range. Even Fridays at 68.5. It's pretty good, but it is the lowest profit factor. So that's interesting. So maybe Fridays you trade less. I don't know. You'd have to examine it. Good thing that you're observing that. It still made money. You factor out trade costs, obviously. This is not net of trade costs. You have to subtract out X amount per trade. Remember, it's a 2-position approach, so if it's 16.30 per trade, it's really 32.60, right? Because you're going with 2 contracts. If you're going with 2 contracts, you have to double the numbers. Not the net, but the average. Yeah. Well, I mean, a lot has to do with paying attention over the market, because sometimes with range bars you can really see that it looks horrible, no range, and so that, you know, how many trades you want to throw at it, or if it's super slow. But I mean, this is all good stuff. Only you can decide what you're going to do with that. But remember, market conditions change, and it could be that Fridays aren't always like that. Let's take a look at the spreadsheet now, and you can see I mean, here's a Friday that was positive, not by much. Maybe you don't make money after trade costs. This Friday was negative. I mean, you only got 4 trades, super slow. You know, that told us something, right? It was just such a slow trade. Also, I'm using the measuring stick. I'm not sure the measuring stick works that well on soybeans. Maybe you want to look for 120% away from the EMA instead of 100% of the spread. Maybe go for a bigger spread, more extreme. I don't see the measuring stick, and it could just be, you know, obviously range bars are different than tick charts. But this Friday was really good, 6 1/4. This Friday wasn't. This Friday definitely wasn't. I don't know why I only put 2 trades in, probably because it was just a real slow and horrendous chart. That's the thing, if it's a slow and horrendous chart, you just might step aside. This one was a little positive. Look at Thursday, I mean, that was really bad. This Friday was really good. Good Friday. I mean, Friday's winning more than it's losing. As you saw, it was winning 68.5% of the time. So this one was really bad, obviously. Yeah, I don't know. Some of these are power of quitting, defending the power of quitting. Once you've gotten on your third trade and you're coming from behind, especially on a Friday, and you have a chance to be positive, lock in and make sure you don't go negative, especially when you're trying to end the week positive. So I use that. That's another thing that might work, Eric. You might have not tried that, like defending your power of quitting as part of the trade plan. That could change things for you. All right, so let's say now that we want to back test and we roll the charts back to some point in time and they end up at October 7th, 2014, and we're looking to start on this session here, right? And so basically I'm going to copy and paste these first 3 lines. You always skip a line between dates, and I'm looking for the first trade. And so the first trade, that's at 7:30, but we know it triggers in. Right here it's at 8:30. You figure it's too fast to catch, but you catch it when it comes up. And so you get in sync with that trade at 8:30. So you're going to put your time in, 2 positions, and then you're going to put your entry in. Right, the buys go in these 2 columns. So you're going to go 941, 941. And you know it's a crossover. You can put those in right there, crossover trailer. Okay? And so we're back testing. We don't know what's going to happen next. We just got to click forward and see. And it looks like it does stop out. So now you're going to go ahead and type in that trade, 939, 939, and there, you just back tested a full trade. Maybe I could tighten this up a little so that we could see the win-loss column too. Yeah, and the other thing you might try, Eric, is a bigger target than 2x. You might try to improve your risk-reward ratio on that fixed target. I've heard from other traders that they do that and they really like that. Your winning percentage might go down a little bit, and there will be times when you don't get the full target. Okay, so the next trade's a short right there at, oh no, that's not the next trade. We have to get back to, all right, so here's the next trade. The next trade is right there at 8:32. So 8:32, type in the time, and now it's a short trade. That goes here in column G, the entry 937 1/4. Now if you're back testing, you're not cheating and looking forward. You don't want to see what happens next. You just go click by click and you make your decision. Try to follow the trade plan as you understand it. Print it out, have it next to you, make notes. You could always change it to better suit your needs. Just don't change it until you've put in a few hundred trades and you've gone back and analyzed and reviewed your notes. Then you could start tightening up the trade plan and making it fit your personality and your sentiments and style and lifestyle and all that. But after every single losing trade, don't do that. Don't try to fix losing trades. That is a loser's pursuit, guys. Don't look in the mirror and say you're a loser, because you always try to avoid losing trades. Avoiding losing trades will get you losses and not get you winners. Okay? That's the nature of this. It's all counterintuitive. Yeah, Eric, you could have a plan where you do that when the jump line is in the vicinity. And if the jump line is like it's moved too fast and the jump line isn't anywhere close, then you go with your lock-in. So you could kind of compromise. Yeah, I mean, and there will be times you'll be glad you did, and there will be times you'll wish you didn't. Nothing's going to be perfect, and you have to be aware of that too. All right, so let's just go on this. We're on this trade here, right? So it triggers in and then it stops out. So 2 losses in a row, 939 and a quarter. And that was today's trades, but if you're back testing, it's any old day. And that's tough. You're down 8 points already. And with a 1-to-1 risk-reward ratio, it's going to take quite a bit to come back from an 8-point deficit. So we know that we need more trades. We'll copy and paste that. You see how I did that? Copy, paste. Never use the command X, the control X, and cut things. If you need to eliminate something, like if you make a mistake, just go over it and hit the delete button on your keyboard. Never hit command cut. That'll ruin your spreadsheet. Yeah, and that, see, Eric, Eric's going through the stuff that you're supposed to go through when you're working with the UTA, because it forces you to face the psychological stuff that makes you a human being, but also makes you a terrible trader. Let's face it, human beings don't make good traders because it goes against everything you've learned instinctively that you need to know to survive. Run away from danger. Don't touch the hot burning stove. It already taught you that it hurts. You can't touch it again. You won't let yourself. Well, when you lose a trade, that's like the hot burning stove. But you do have to reach out and touch it again. So you have to understand that. You have to train yourself. This is part of the process of training your psychological side. You got to not be a human and become a trader. Different animal. Here's the next setup. Is it going to trigger in? Well, now we have an inside trade. I personally take those. So for me, if the inside trade triggers in, and incidentally, I did take this one today. I didn't take both these because I didn't get in on this one. I took this one, got a loss. I took this one. That one ended up being a winner. So that's the inside trade, 836. 941 is your entry. And I always label the inside trades because maybe one day I'll go back and reanalyze them. I don't know. But if I wanted to, I could. So right here, this is called a deeper pullback. It's the same thing as inside trade. So AJ's giving you the way he does it as an idea. All right, so anyway, I like putting these little arrows to mark the setups in case I want to go back and review later. So that now I know I'm at money management, and then I hit full target. So now I'm going to pause and I'm going to type in 943 on that first position like so. See, I'm back testing, right? This is what back testing is. One click at a time forces you to think through everything. So now it comes down and it hits the one tick lock-in. Actually, it hasn't hit it yet, right? Because we're in the yellow trade. It hit the one tick on the blue trade. If you're not taking the inside trade, then you would have put the blue trade as your... And some traders prefer to wait and let the breakout occur. I just like the inside trade, but you might have been in the blue trade, so you'd be tracking that one. Okay, so we're still not out of this trade yet until the next bar, and that's when it stabs through right there. So now you go ahead and you will type in 941 and a quarter, right? One tick like so. And then there's your next trade, 842. $9.42 and a quarter. And that's a jump trade, J and T for trailer, like so. And so what happens? I don't know. Stops out. So that's that third loss. All right, so 940 and a quarter. So here's a case where the risk-reward ratio really hurts you because the trailer, if the trailer doesn't make any money, you only have one full winner, but you've got 3 full losses. 6, I mean. 1 full winner, but 6 full losses because of the trailer. That's one of the weaknesses of this trade plan, but we get such big trailers, it still doesn't matter. But my suggestion is if you go for a slightly bigger target, then you can improve that over time. But how big is your target? Because if you went bigger on the yellow trade by very much, you wouldn't have gotten it. Like, you wouldn't have been able to get a full, if you were way up here, you wouldn't have hit it. So how much bigger do you go? 1 or 2 ticks bigger maybe? I don't know. Could make a difference. But that's the next trade, 849. And because I'm using a crossover and I can see it's a crossover, I can just copy the whole line like this. Less typing for me. And then I want to delete this, so I go over it like so and use the delete button on my keyboard. And then I put in the right information, 849. And that's short at 939.50, like so. Comes down and hits the full target at 937.50. What if I wanted to test a third target also? You could put a third line. You can make each trade 3 lines. Maybe you want to test that bigger target. So you could do a 3-trade test instead of a 2-trade or 2-position test. You can do a 3-position test. That's why you have to ask the right questions. You might want to test that 4x level. That would have made a big difference. All right, so anyway, comes down, finally. When it gets all the way down here at 938, I mean, you're down by 7 3/4 at that point, and it goes from 939.5 all the way down to 933.25. So it almost gets you positive, but maybe not all the way. So, you know, you have a decision to make. Do you want to? For me, I would just, if it's not going to get me positive, just go with the trade. You don't want to second guess too much. 936.25. You're only down 4.5 points at this point. You got 1, 2, 3, 4, 5. So you have to make a decision. Do you keep trading or do you stick with your comeback? And just, you know, only you can decide when to stop trading. I can't decide for you. There's the next trade. For me, I got to get it up to 7 trades just to stay consistent. 937.75. So I know, unless this is the big winner here, I'm going to go ahead and get ready for the last 2 trades. We'll go into this spreadsheet per this backtest, quote unquote. There's your long at 937.75. Jump, trailer, and there's a full winner. So maybe now you have a chance to protect your power of quitting. 939.75. So one thing you can decide is this. You could say, well, I'm going to move my stop up and make sure that if it pulls down, I'm out and I make 1 or 2 ticks and I'm done. Or you can say, well, theoretically I can get out with power of quitting, but I'm going to let this trade play itself out, and win or lose, this will be my last trade of the day. You can make that your plan. You have so many options. Also, if you are tracking the jump line instead of locking in 1 tick, here's a case where the jump line is tracking the trade closely. So maybe you want to test, instead of locking in 1 tick, you trail the jump line. So you're a little bit below. I don't know. Like I said, there's a million ways to do it. So this is where we're at. So if you would have gone up to 940.5, you're positive for sure. You're not going to mark it out at 940.5. You're only positive by 1 tick. But if it were to plow up further and go up higher, you have a chance to be positive today. So it's up to you on whether you're going to take that or not. As it is, you're only down 2.5 points. It's staged a comeback. This is the kind of thing that you need to experience, because no one wants to be 8 points down on any session. In real life, you're going to be going, oh, you know, who knows? That might affect you in all kinds of ways that are unpleasant. But you want to feel that unpleasantness in the back test and imagine real life, and then see it come back even though there's another loss, and get to within just one target away basically from break even. You want to experience this over and over and over again so that eventually you learn how to live above the forest like so. This is what you're trading for, and not lost in the trees worrying about, you know, 2 losses in a row is nothing. That is the most common event that ever occurred in the world of day trading. And if that bothers you, that's just a big indication that you have a lot of work to do on yourself. 2 losses, 3 losses in a row? I mean, come on. Really? That bothers you? It shouldn't. But, you know, it bothers me. It bothers everybody. If you're a human being, it bothers you. But let's now pretend we're traders, and then you just have to laugh it off. I mean, really? 3 trades in a row? Is that a problem? Of course it isn't. That happens every day. That's just part of trading. If you can't accept that, you're in the wrong business. Or you need to do this kind of work so that you learn to be able to accept it. Because it doesn't matter if the end result is the forest going up. Remember where your priorities should be. So there's some tough love for you, Sean. But that's what it is. That's what it is. Look at this is zooming upwards. At this point in time, your account should be positive. Let's say you traded this with 2 positions, took all the trades. Now you're positive, but the stop's way down here. Are you going to let it come all the way down? You can. You might say, yeah, I want this trade to play out. I don't want to miss a 10-point run. And if it loses, I'm still going to quit today. Or you can just move your stop up and lock in a tick or 2 and make sure no matter what, you don't care if you get out of a trade prematurely. Or you could say, well, it hit that final target. Maybe I'll just get out right there. So many options. Yeah, Sean, it's the only way to learn, and it's the way to become, look, remember what I said, you got to ask the right questions, have the right goals, the right premise. You want to make sure you're getting out of it what you need. And what you're trying to do is recalibrate your internals so that you learn to you learn to take the big perspective and make your decisions like a CEO would make business decisions for the business. You know, some of the soldiers might fall, or the general. You know, you're the general, you're committing resources, and you're going to lose some of them in order to grow or push the line up, whatever, however you want to look at it. Same metaphor, same analogy. So this should be the last trade of the day, right? I mean, that's a pretty strong move. The market is giving you the chance to go from negative to positive and end the session positive.